Hey guys, this is Rene. Welcome back for another video on this channel. It is the 3rd of February 2025 and I think we have to talk about the gaps that we saw today in the morning in the big indices because it has a huge impact also on my personal trading account. I see it as a huge blessing. It is a huge benefit. It's in one of my last videos I talked about these situations like free money. Of course, it's not like free, but let me explain in this video what I'm talking about.
This video is presented by BM Trading. Learn to code your own expert advisors. Link in the description.
So we can see here on the screen, this is my live trading account, nothing new. We know this account. And as you know, and I always talk about this a lot in my videos, I tried to just take or apply common sense, develop some strategies of which I believe that they would be that they are very fundamental in the first place. They have a strong basis, a strong logical idea underneath that stabilizes these strategies in the long run. This is my opinion, and of course it is my money, so I can do whatever I want. But let me explain what I'm doing here. And I trade a lot of these strategies are just based on indices. And for example, I have the go long strategy, which is a very simple strategy which essentially just buys the indices in the morning and sells them in the evening. I trade this strategy in three markets, in D40, US 30, US Tech. So all of the huge indices like the US indices and the German index, just because I am from Germany, so I kind of thought this would make sense. And so I trade these basically just long. And I also have like the turnaround Tuesday strategy, which I trade in the same markets. And let's go to my local desktop, because I prepared these three indices here also in the charts. So what we can see here is today in the morning, after a weekend, and we saw these very big gaps. And these gaps are actually, like in US 30, it is around 1% now, a little bit more than, or it was around 1%. In US Tech, it was actually crazy. It was around 2%. And in the German index, now, like the gap was also like 1%. Oh wait, it started here, it was like 1.5%, but now the market fell down even more. It's like 2% now, and the position here in my account opens a little bit later, so it's not open yet. So it's like around or more than 2% of free money. So when I say free money, what do I mean? My general idea for these three strategies specifically is that economies or stock markets over a long period of time tend to go up. This is not rocket science. This is nothing I invented. This is what people talk about for years. They say like invest in index funds and stuff like that, which is of course because of this idea that markets should go up. Like if I go to a daily chart here, for example, we can see, and my history, I don't know how much history I have here, but we can clearly see that overall the trend is pretty clear. And I can do the same thing in US Tech, and I can do the same thing in US 30. So if we go to the daily chart, and if we just have a look at a long period of time, we can see the market, it is going up. It's easy to see, and this totally makes sense because companies become more, or they increase in value because people are working, people are trying to increase the value of the company. That's basically the only goal of a company, and companies are bunched up in these indices, and this is why like index funds and stuff exist. So what do I do with this strategy? I said I just follow the market, and I just go and buy every morning and I sell every evening. Now there was criticism before already, and of course I asked myself the same questions. Does this even make sense to do it with CFD? Because with CFD, of course, we have high costs, like buying and selling every time we pay the spread. And so the question is, does this even make sense, or wouldn't it be better to just hold a ETF? So first of all, yes, it would probably make more sense to hold a ETF, but we cannot just compare these things one-on-one because they are completely different products. Like with ETFs, you do not have a leverage product. You can, for example, if you have 10,000 euro, you could buy one ETF with a worth of 10,000 euro. But here we are looking at CFDs, leverage products. They are more expensive, yes, but they are leverage products, as the name already says. So with your 10,000 euro, you could not only invest these 10,000 euro, but depending on the leverage that you have in your account, which is usually for index CFDs, I think somewhere between 20 and 500, you could take your 10,000 euro and you could, for example, say you want to invest 100,000 or you want to invest 1 million even, depends on the leverage you have. So this is why you cannot just say I want to compare this the relative performance of one index CFD like 10k invested and one CFD on the same index also 10k invested. You cannot really do it, or it doesn't make sense because you are comparing apples to, I don't know, pineapples or whatever. So this is why like the power of CFD trading is in the leverage. And this is why also in my account here, I do not trade only one market, but I trade multiple markets. And this is where the power is coming from. And now let's get back to these gaps. Like these gaps for me are super, super nice to have because, as I said, I invest early in the morning and then sell in the evening. So what I did last Friday, oops, where's my crosshair here? I sold here, and then this Monday I bought here. So we can also see it in the live account again. So all of this, like that lays in between here, this huge gap is where I did not realize the losses, but instead, if my theory is correct and markets will go up in the long run and will make new all-time highs, this is the gap that I will then realize in profits most likely. Because, now my crosshairs here. So see, like this, like 2.4 or 2.5% even in US tech. This is what I call the free money. I hope you can follow my thoughts. But I was extremely surprised positively today in the morning when I saw this gap. And this is not what happens only what happened only once in the last few days. This gap here, which was another like 0. I don't know how much exactly it was percent, like free money. So these are the scenarios or the gaps that are very beneficial for the go long strategy. And don't get me wrong, I'm totally aware that these gaps can only happen in the other direction, and this is then negative for the strategy. But the history has shown, and we can have a look at other very other events that display this very beautifully. Like for example, when COVID hit, which was around 2020, I think. We had another very, very nice example of this, of these situations. Like we had multiple of these gaps. Like here it was going down like 1% free money. Here it was going down 2% free money. And so these things happen from time to time, and the market tends to crash down quicker than it goes up. And this is why often these downwards gaps are higher than the upward gaps. And this is a huge benefit for the go long strategy, and one of the reasons why I still believe, even though we do have all of these like negative side effects that are definitely a minus compared to like classical index funds, for example, or ETFs. This is why I still believe that the go long strategy is a great addition for my personal portfolio, even though we do have like the negative impacts of the higher cost that we do have if we open and close the position every single day. So this is just a little update so you can understand better why I trade the go long strategy and why I believe it definitely has, like this approach definitely has some advantages over a classical or conservative exchange traded fund invest. And I hope you can follow my thoughts here, and I hope that it makes sense to you. I mean, it does not really matter if it makes sense to you, because I trade it with my own money. So it does not really matter if you think this makes sense. But I often see these comments where people say it's stupid what I do, and I know where these thoughts are coming from. I just explained like the comparison from ETFs and CFDs and stuff. But personally, I believe that if we want to make use of leverage trading with CFDs, this is a valid approach that I also like to use more. I mean, I do use it, and I will not change it. I will use it more in the future. And this was just a little update on these gaps and why I see them as so incredible positive events for my personal trading portfolio. Okay, have a great trading week, guys. And hope you made some profits, like some free money on these gaps also. Have a great time. Bye.